Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I'm pretty much going to start with the charts, and there's a reason for that. One of my catchphrases, as I'm sure you know, is things can change and they can change quickly, but they haven't changed yet. Well, as it stands, it looks like they're starting to change. So I just want to make this really clear. There's a time to be in the market and there's a time to move to a defensive posturing. When we were at the lows, when we were breaking out of year-long downtrends, I became as bullish could possibly be, calling for all-time highs before we'd even broken out in the stock market. Whilst that still remains my base case, cycles are cycles, they will be respected, and the early warning shots are being fired. So I want to go through this. I posted this yesterday. I said, look, as per yesterday's video, warning shots are being fired. It's possible that what we see is a gap fill and then we reverse. But if we don't, we have to be open to further downside. At the same time, mega cap breakouts are also potentially starting to fail. So when the major names do not break out, do not follow through after a breakout, if we start to get failed breakouts, fake outs, that sort of thing, that's also a warning shot. That also tells you the market is not quite ready to move higher yet. And when it's not ready to move higher, that usually means it's got to move lower first. So again, we could be retesting in these mega cap breakouts, and we could just be filling the gap and about to reverse and print a new high. But when the market gives me a signal like this, when the market starts to flash and indicate that it's potentially weaker than it looks, my job as a trader primarily is to manage risk first. It's no good just saying, oh, well, we'll probably make new highs and then giving back a load of profit. So I've done well this year. I'm now officially moving to a defensive posture. If today's closes are really strong, if we get massive reversals and we continue higher, then that's fine. I'll pivot again. I'll be playing aggressively long, but ultimately my job is to remain on the right side of the market. And as it stands, given we've had these warning shots fired, that has now put me into a more defensive posture. So if I start with the S&P 500, this is early in the cycle. We are only on day 7 at the moment of a total 40-day cycle. Now this low doesn't have to form up here. It could form anywhere in this neighborhood at all. We are early in this daily cycle. So far, we have held this blue really steep uptrend. So that's point 1 for still maintaining bullish structure. If I get rid of this, you can also see we had this gap. So far, we've backfilled it and are looking to reverse. Now, if from here, if Friday's close, today's close, is a bullish big green candle back above this cycle confirmation level here, then that's absolutely fine. If we see a close today like this and then we continue up for a bit, then I have no problem pushing all my longs, expecting higher prices from the market. But the fact that we broke down below this level here is an early warning signal. It's a canary in the coal mine, and it could mean that what we're about to do is roll over. Now, if we roll over, this stop from here is already moved up to underneath this low. Okay, so I'm not going to tolerate any move below that. This means I'm guaranteed to lock in this much profit. I want to give this trade a little bit more space just in case we get that reversal and an uptrend to follow. But like I said, warning shots are fired here without a shadow of a doubt. So as always, whenever I move a stop up, I show you like this. So here it is, a dashed red line indicating that is where my new stop loss for this trade is. I still haven't gotten back into the NASDAQ. I was waiting for a break above this top here and we didn't get that. So for now, still neutral, still open to seeing this. Now, of course, if this market closes above here this week, then next week we can look for longs and more upside. But like I said, as it stands, we've got warning shots being fired. If I move this out the way, you can see that it's potentially just a gap backfill. So we got the gap between the red candle and the green. We've just potentially backfilled that, and now we're looking to resume up. That would be perfectly normal and healthy price action. But as it stands, we don't know whether this is going up or down. So we have to be open to both. We have to be ready to respect both. I'm certainly not long at the moment. As you know, I took this breakout from down here. I ducked out somewhere in this neighborhood. So for now, I'm flat and neutral. Like I said, break above here, and we have a justification. We have a trade thesis for placing a long on the NASDAQ. But if we don't do that, if we continue to sort of stall around this neighborhood, then it's most probable, from my perspective at least, that what we're going to see is something like this unfold. So again, it's another warning sign. It doesn't mean it's over. It just means the market has signaled to us that potentially we're going to see a rollover. Apple doing a similar sort of thing here. You can see we got the gap from this green candle to this green candle. So far we backfilled it and closed back above. So it could go either way. For me, this is such a well-defined and healthy and established uptrend that the only thing I'm paying attention to remains to be the blue and yellow trend lines. As long as we're above those, I will continue to push this long. But make no mistake about it, if indeed we are about to break down in the indexes, it's perfectly reasonable to expect some kind of deeper correction. So these are my lines in the sand. They've been my lines in the sand. And if we lose those on a daily closing basis, then I will lock in the profit from here to wherever we break down from. It's a similar deal with Tesla. So again, we've got this big gap, haven't we? Are we going to backfill that and go? Quite possibly. And if we do, there's nothing wrong with that. But all the while we start to trend down here, we have to be open to seeing a trend line breakdown. If, of course, we break down from this upward sloping blue support line, I have to exit the market. A quick message to the members only chart setups, all of those breakouts are the mega cap breakouts. They need to follow through. The ones that have broken out, they need to follow through. If they start to close back below the breakout level, then again, that is a sign of weakness. That is a canary in the coal mine that tells us to be open to further downside. Now, to be really clear, assuming we do roll over from here, assuming this position is stopped out, like at the dash line, as you can see, it's not the end of the world. It just means that instead of the cycle low forming up here and us doing something like this, boom, and then go, all it means is that we'll likely do something like this and then go, and we'll move the arrow down here. That's all that means. So it's not the end of the world. However, it does mean that perhaps the best position available at the moment, if of course we start to break down, is a neutral or flat position. If you're an expert, you can go short here, you could long the VIX, you could buy or sell puts, you could do whatever you want, right? For me, I think the position of power would be to go cash and to sit on the sidelines and wait until we get down into that cycle low time frame, whether it's up here or down there. And then from there, I think it's time to really find out if we can indeed put in the blow off top to all-time highs, or if we just get some kind of counter trend bounce that then rolls over. And if that's the case, then we will have to deal with that as it shows up. So overall, I don't think it's too bad, but as you can see by me moving stops up, by me making sure I know exactly where my exits are going to be, I've started to position much more defensively. I no longer trust that we are in a full bore bullish melt up in the short term. I do still believe the melt up is valid. Like I said, once we find that weekly cycle low, I think we can go again. But I certainly don't want to be sitting here just in case we do indeed get some kind of big, sharp decline. I want to breeze through the rest of the charts real quick since we're here. Gold, as you can see, still underneath resistance. So unless we can break out, then we'll keep pushing the short. Silver, still patiently waiting. You can see big rejection as of yesterday. So are we going to do what I thought we were all along, which is come back down here, sweep these lows, take the liquidity from the stop losses, and then break out? That would make the most sense to me. One day at a time as ever. If it breaks out before, then we'll add the long there, and the stop can, of course, go below the local lows. A bit nearer the time, I'm going to start to cover the miners again, because I think it would be time to add the miners. I still think probably they've got to go down a bit lower, and the same for these ones you can see here. When was that painted? All the way back at the beginning of June. And same deal for the junior silver miners. So it'd probably be time to add some of these to longer term accounts as and when gold can break out and reverse, and the same for silver. But for now, I do think we've got a little bit of working out to do. So I'm going to come back and do crypto charts at the end of the video, but I want to point this out as well. So in addition to the risks that I've highlighted yesterday, in addition to the risks from the charts, or the early warning signs, I should say, that I've showed you already, we also have to pay attention because KRE, which is regional banks, with yields rising, have a very inverted curve, which means there's maximum stress on small banks with bad balance sheets. And of course, nearly all small banks have bad balance sheets. So this is something we've got to pay attention to, because if this drops below $35, then we put ourselves in a no-go zone. That brings the old short selling ban trick back. And when that fails, the Fed has to open the floodgates. The question is whether or not the Bank of England will do it first, or the Bank of Japan needs to move to yield curve control. Either way, all roads lead to more cowbell, more printing of money. There is no other way around it. So potentially this could act as a short to medium term catalyst whilst the stocks are having a decline, whilst the stocks are moving into those cycle lows. And then in around 30 days time, I think we will have what will frankly be the biggest opportunity since the lows back in October. In the short to medium term, over the next 30, 40 odd days, there is significant risk that has started to present itself. And if you're wondering what the bank reserves have to do with the S&P 500, the bank reserves are in blue here and the S&P is in red. So as you can see, largely correlated, big divergence. Tells us to be open to seeing that decline into that weekly cycle low, doesn't it? All the stars seem to be pointing to me moving to defensive posturing being the power position. Bitcoin, on the other hand, I'm starting to get very, very excited about. Now, as a trader, of course, I manage my emotions. I do not let my emotions get in the way of my trading. But as a Bitcoiner, I'm starting to like what I see more and more and more. Here's Bitcoin, right? How do we know it's going to outperform in the next decade? Because the adoption S-curve of money, which is half of everything, currently sits at around 4% of the population for Bitcoin. It is going to go much higher. We are only at 4%. As you can see, we are just in this neighborhood here. So we're not even close to the takeoff portion of the S-curve of adoption, let alone the vertical part. There is major, major, major adoption coming according to the S-curve, assuming we can maintain the current rate of growth. I think the ETFs will help that. And more importantly, if you go back in time and look at the data, what you will see is the adoption of Bitcoin roughly doubles every year. So we are likely going to be here within the next couple of years, and then it's time for true liftoff. In fact, I made a video showing when Bitcoin will reach 1 billion users and when it will reach 5 billion users some time ago. I'll put a link, I'll link that at the end of this video for you. So at the same time as all of this is going on for Bitcoin, of course, the supply shock cycle is upon us. You can see right here, massive decline. Only 22% of the Bitcoin supply is actually available for people to buy. The rest is entirely locked down. And every single one of these ETF, these spot ETF applications in the USA is currently naming Coinbase as their custodian. But did you know that they only have 446k Bitcoin? There's simply not enough to go around. There's an interesting side note here for Coinbase is if all these ETFs do get approved, and if all of them do indeed use Coinbase as their custodian, then Coinbase is about to become the biggest hacker honeypot on the planet. I would feel quite uneasy about this if I was in charge of security at Coinbase. So with the price action doing what it's doing of late, which is absolutely nothing, chopping sideways, keep this in mind. The price is right back to where it was 4 or 5 days ago, but this time without 400 million in leverage longs trying to play the breakout. So all the leverage has seemingly been flushed. All we got to do now is move above 31.4 and the 40s should come fast, as I've been saying for some time. We get a bull flag break, and I'll get to the charts in just a moment. We will see 40 plus K Bitcoin come shortly thereafter. And this is one of my new favorite Bitcoin metrics, the Bitcoin risk signal. So Bitcoin's sideways trading range sets the stage for bullish momentum. Why? Because the Bitcoin range-bound trading between 31.2 and 29.6 allows for a consolidation period, re-establishing bullish momentum. It allows these indicators to be reset. It allows people to calm down and get used to seeing these sorts of numbers for Bitcoin. And the Swiss block risk signal remains stable at 0, supporting potential upward momentum. So in conclusion, Bitcoin is likely to break above 31.2, and once it does, that should provide a strong foundation for buyers to target 33, 34.8, and of course 40 thereafterwards. So with all that as context, let's jump into the chart. Of course, if you've been watching this channel, you'll know a lot of us, myself included, are hoping to see some kind of a flush down into that cycle low, and then we can buy the swing and reverse. If it doesn't do that, we're probably going to have to entertain an alternate count and move the arrows here and here. That's just the way it is sometimes. But ultimately, as I've been saying, I kind of expect us to chop around here and then break out at some point, assuming we don't come down first and then go and break out. But either way, a break above here, I will be adding along for Bitcoin with a stop below wherever the low is. And of course, if we get a plunge down and a reversal, then I will, like I keep saying, buy the swing and put a stop under wherever that low forms. Either way, we get to find out something interesting pretty soon. If indeed the stocks start to roll over, the question is, does Bitcoin follow, or do we actually see the rotation out of stocks and into Bitcoin driving this market much higher? This chart has always kind of been more for fun than anything else, but undeniably, we're still very much within the realm of expectation to see this move higher, assuming it is, of course, going to move higher. Unless it breaks away and starts to base here, unless it pulls back, then why not continue to follow what is happening right in front of our own eyes? We've also got Ethereum hanging around in no man's land, so we'll keep pushing that trade. And the crypto-related equities, I think the stage is set for a blast off here. This is undoubtedly a massive accumulation. We could also count this as, let me get my pen, an inverse head and shoulder structure. I'm not a big fan of these personally, but undoubtedly that's what that is. And this blue box would be the neckline breakout. So get above there, and I think we can see the triple digit for Coinbase very shortly thereafter. There's a long, long way up. My long-term target for the end of this bull run for Bitcoin is 420. Damn! for Coinbase. So can that happen? Can't that happen? That remains to be seen. Certainly if all these ETFs get approved and all of the spot Bitcoin ETFs use Coinbase as a custodian, I see no reason why we couldn't get up here on a wave of hype around Coinbase. MicroStrategy, similar sort of deal, isn't it? We've got this sort of inverse head and shoulders pattern. We are broken above this neckline and we're on a rip. So happy days there. These seem to know something. These seem to be more confident than most people are about the price of Bitcoin appreciating over the coming days and weeks. Here's Riot, as you can see, got this big bottom formation, multiple breakouts, and still pushing higher. So again, same sort of deal, isn't it? And finally, Marathon. Marathon is an absolute blast off mode at the moment. And again, a long way overhead, isn't there? A long way overhead. Doesn't mean up here would be a reasonable valuation by any means, but it's certainly achievable for a stock that is tied to Bitcoin and will undergo massive hype and speculation, particularly as Bitcoin's price starts to appreciate. So overall, the market doesn't look too bad. Like I said, in terms of the stock market, I'm posturing it defensive, and I think that's the best play. We'll learn something today, the closes. Remember, bullish closes, happy days. Bearish closes, then we got to be open to moving this arrow all the way down here somewhere and seeing another 30 odd days of decline. I'm not too worried about it. I just want to do my best not to give back a bunch of profit because, of course, it's easy to make money in the stock market. It is not easy to hold on to it. So work on protecting your capital and you will see massive increases in your performance and in your portfolio over time. I'm your boy Camel. I hope you enjoyed that. I hope you enjoy your weekend. Happy Friday.
It's Friday. You ain't got no job and you ain't got shit to do.
I'll be back over the weekend to make sure we examine the closes and see what we've learned. And in the meantime, look after yourselves. Take care from me. All the best. Cheers. Bye.